Hello everyone, welcome to another session on currencies. Today I'm going to start with dollar index and then I'll come to dollar INR. Okay, something very interesting happening on dollar index. So this is the DXY dollar index chart for 2 hours. So the frequency is 2 hours. Be careful, this is not daily, this is 2 hours, 2 hourly chart. And what we have seen here is a very beautiful inverse head and shoulders, and explain what it is, a technical chart formation and how it is read. Okay, so if you look at it, there has been a decline since November from 100 plus levels and it came to around 97.75. And if you see the pattern, this is the left shoulder. Okay, so you have a bottom, prices went high, then you have a second bottom. Remember, this bottom went lower than the first bottom, which we call as the head. The prices went higher and then again it fell and it formed a third bottom. Now the third bottom is the right shoulder, the first bottom is the left shoulder, and these two are very close to each other, and we have a head which declined way below than both the shoulders. So it is like a inverted head and shoulders on the bottom side. Now what is important is this line, the line connecting the highs between the left shoulder and the head and the right shoulder and the head. So what we call this the neckline. The neckline is very important. The break of the neckline suggests that the price will have a upside. Okay, so it is a long pattern formation, invert head and shoulders. It also is like a long term, not really long term, 2-3 months, a medium term, cup kind of a formation. Okay, also a basing kind of a pattern. What is critical is the break of this neckline, and what it looks like is the break will at least have a 1 to 1.5% upside. Okay, so it is just around 99 and we feel that it could get closer to 100 or 100.25. So that is the view on the dollar index. The dollar index going higher means the dollar will get stronger. Okay, so now let's try and see what is the impact on the INR, dollar INR pair. We have seen dollar INR consistent uptrend since April-May. Rupee has been weakening, RBI has intervened. What has been surprising is that this week, when the dollar INR was around 90.25, there has been intervention by the RBI on 2 separate occasions, and on both these interventions the rupee had gained. Sorry, let me get my pen. Rupee had gained, quick gains of about 30-40 paisa twice this week. So that is kind of a surprise, RBI intervening at 90.25, and we saw the price coming towards the 25-day exponential moving average. Both 25-day EMA as well as 25-day SMA we have seen in recent past is that they tend to be support indicators. So if we are saying that the dollar index is going to go higher by 1-1.5%, then we might see rupee in some bit of a weakness. We might not see a 1-1.5% weakness in rupee, not a very high same degree of correlation, but some degree of rupee weakness. So dollar strong means rupee weak, but with RBI around, I am not very sure how much that will culminate into the weakening of rupee. But nevertheless, the dollar index chart looks very pronounced, and the inverted head and shoulder looks for a breakout, and we can look at a 1-1.5% upside. So rupee bottom line in dollar INR is, if there is any dip closer to these moving averages that I have said before, 25-day EMA SMA as well as the 50-day SMA given by this blue line, all these are buying levels. Okay, dollar buying levels. The premiums had gone higher, now the premiums have stabilized, the dollar INR premiums. So looking to hedge for short term liabilities makes a good amount of sense for dollar importers. Dollar exporters, when we have seen this kind of a rupee weakening, they are not very reluctant to hedge, but be mindful of the fact that RBI is intervening and we have a 10 billion swap coming up next week. So they will have $10 billion of ammunition in hand to control the weakness of the rupee. So there is an increased likelihood of two-way movement in dollar INR. So don't assume that rupee will continuously keep weakening and it will go in your favor. do hedge a decent amount. You can hedge using forwards whenever the prices go substantially above the moving average, and you should certainly use certain degree of vanilla options. Option premiums are still relatively very inexpensive, not really expensive, and digestible. So for dollar exporters, forwards and options both, and dollar importers, look to do forwards whenever there is a touch towards the moving average. Okay, so that is it from my side on dollar INR and Indian currency markets. Have a great weekend ahead.